Contingent liabilities, the last category of short-term liabilities. Okay, a contingent liability is based on like a future event. And again, I always use a litigation as a good example. It's where I come from. So again, let's say we get sued and we receive this letter that says we are being sued. There's really three possible outcomes, right? We're obviously going to go to trial. We're going to try to defend ourselves against this lawsuit. And the outcome of that trial, there's like three different types of outcomes, right? So when I get sued, um, the lawsuit it could be the case that, man, like, unfortunately, there's a lot of legitimacy to this complaint, and the chances of us having to actually pay that or the chances of us at least feeling or being guilty is pretty high. And so, the one outcome, the one theoretical outcome is that, man, like, it's probable that we might be liable associated with this complaint, right? So probable meaning it's probably going to happen that we're going to be found guilty. Alternatively, we could receive a complaint and it could be, man, this is crazy. Like, we hear what the individual is saying, but boy, we really don't believe that we were responsible for this, and we think that we can go to trial and we could win. Now, there is a possibility, right? There are some facts that go against us, and so there is a possibility that maybe we are held liable, but it's only a possibility. It's not like it's probable. It's just it could go either way. But yeah, there is a possibility, right? That's the second category. And then the third category is like you receive this complaint and you're like, this is fucking ridiculous. There's absolutely no way we're ever going to be responsible for this. Like, the chances of us being found liable is just ridiculous, okay? And we refer to that as remote. So, depending on whether it's probable, possible, or remote, it will dictate how we treat those contingent liabilities in our financial statements, because again, like, we don't really know what the amount's going to be or if there is going to be an amount, and we have to go to trial and all these things have to happen. And so the question is, man, do we have to say anything in our financial statements? Do I have to put something on the balance sheet as a liability? Okay, so here's the deal. If it's remote, right? If there's literally no chance of this ever seeing the light of day, there's no chance we're going to lose in trial, you don't have to do anything. Okay. Okay. Like, it's not going to happen. No big deal. Like, this thing is ridiculous. Okay. You have to be honest. You can't look at it and be like, shit, this is bad. And then say, oh, but it's remote, so we're not going to include it. You have to be honest. But if it is remote, you don't have to do anything. Possible, right? So there is a chance. Okay, there's a chance, but maybe we don't know necessarily whether we're going to be held liable. In that situation, we would at least disclose it in the financial statements, okay? We would put a note down somewhere below the balance sheet and we would say, hey, we're being sued, okay? If we're found to be liable, the amount that we would have to pay, we're not really sure, okay? But just the FYI, there is a possibility that we could be found liable. And therefore, there is a potential liability, but it's not really in the balance sheet. It's just discussed in the notes. Okay. Last category, which is the probable one, that's the hard one to deal with. So if it is probable, okay, and we can estimate the amount if we're being sued, and hold on one sec. Sorry about that. But what we're saying is, if it's probable and we know the amount, right? So we're on the eve of the decision from the jury. The jury is telling us or giving us indications that the amount's probably going to be $10,000. So it's probably going to come back against us, and we know the amount. You need to record that in the financial statements as a liability, right? So it would be litigation expense, 10,000, and then litigation settle, like litigation award payable would be the liability. So if you're on the eve of trial, the other alternative is that it's not estimatable, right? So you're on the eve of trial, and what you're probably saying is, unfortunately, we're going to be found liable. Okay, like the chances of us getting out of this is not good. We're probably going to lose. However, we're saying we only owe the client two, or the plaintiff 2,000, and the plaintiff is saying that we owe them 10,000. All right, there's a dispute, and there really is no indication from the jury how much the amount's going to be. Could be two, could be 10, but it's going to be one of them. All right, so if it's probable, but we don't know the amount, then we're going to disclose that in the notes, and we're going to say, hey, we're probably going to get hit with this liability, but we don't know the amount. It could range between $2,000 and $10,000. Yeah.